Saudi Arabia needs to break its addiction to oil. A dramatic drop in crude prices over the last 2 years has drained the coffers of the world's top oil exporter. Its deficit ballooned to a record $98 billion in 2015, forcing cutbacks in public spending at a time when the kingdom needs to create new jobs for its growing youth population and fund a costly war in neighboring Yemen. The traditionally conservative, inward-looking kingdom is opening up to international markets and investors. So what's the plan? It's called Vision 2030, and it's being overseen by the king's 31-year-old son, Deputy Crown Prince Mohammed bin Salman. The government wants to more than triple its non-oil revenue by 2020. It's rolling back state handouts, and it's loosening restrictions on foreign capital to lure investors into financial institutions like the stock market. The country's just tapped international markets for the first time, issuing a massive $17.5 billion bond in October, the largest debt offering by an emerging market ever. The huge offering attracted wide-ranging interests. Asian central banks, European sovereign wealth funds, and Middle Eastern banks all got involved. It's announced plans to list up to 5% of the country's giant state-owned oil company, Aramco, in 2018. The company's estimated to be worth between $2 and $3 trillion, potentially the biggest IPO ever. Officials have said they're considering several locations to list the company, including Riyadh, New York, London, and Hong Kong. The kingdom's also looking to diversify its own investments, expanding the scope and size of its sovereign wealth fund. In June, it invested $3.5 billion in Uber, its largest overseas investment so far, and it's teaming up with Japanese software and telecoms giant SoftBank to set up a $100 billion tech fund. So what's the catch? The planned turnaround could reduce the benefits the monarchy has long lavished on the population, potentially upsetting the country's stability. The monarchy has already changed a number of key ministers. It's replaced powerful and long-standing oil minister Ali Al-Naimi with Aramco's chairman, Khalid Al-Falih, and replacing finance minister Ibrahim Al-Assaf with the country's chief stock market regulator, Mohammed Al-Jadaan, a key player in the country's efforts to open up its market to foreign investment. Global banks and investors have shown that they're willing to bet on the country's reform agenda, flocking to buy into its successful bond offering earlier this year.
This is a huge boost to sentiment. They now know they can tap the international market at a reasonable rate and with amounts that are record-shattering.
But there are skeptics.
It's hard not to believe their intentions. How they go about doing it, they weren't really that clear.
Then there's transparency. A ranking on the transparency of sovereign wealth funds by the Institute for International Economics found that Saudi Arabia's is less transparent than Equatorial Guinea's, currently the most opaque in the world. The fund has a website with one page in Arabic and another in English. That's it. And then there's the corporate culture, or rather lack of it. Possibly the most hotly anticipated part of the transformation agenda, Aramco's IPO, will require a major cultural shift to open up the company. The secretive state-run company currently doesn't disclose its annual profit, revenue, or debt. The country's promised more transparency as it opens up to the global economy, but there's still a long way to go.